In this video, we're going to talk about how to buy a house at auction without cash. Did you know that you could buy a house at auction even if you don't have cash up front? Auctions can offer amazing real estate deals, but they're just not for investors with deep pockets. In this video, I'll show you exactly how you can secure your dream home or investment property at an auction, even if you don't have the cash to fund it yourself. By the end of this video, you're going to be an expert on how auctions work, how to buy at auctions without your own cash or with your own cash. And me and Paul, we've purchased properties at auctions for decades. And we're going to kind of take you behind the scenes on how we navigate the different types of auctions out there to purchase these deep discounted properties. So with that, Paul, let's start off talking about, understanding some auction terms.
Sure. So the biggest terms when you're looking at a property is the bid, right? The bid button right there. That's the most important one. Click on the bid. But before you click on that bid, you got to do some due diligence before and know exactly what you're going to pay for that property, right? So that's one of the things they talk about in their terms of conditions, that do your due diligence. That is on you. They give you some information, like the information that they give you, what the earnest money deposit would be, what percentage of the bid price would be the earnest money deposit, how soon you have to get that to them. Some of the other terminology that you need to know is vacant or occupied, right? Because we try to stick with vacant properties. We don't go after the occupied properties just because there's too many unknowns. If it happens to be in a local market where we are and we can go there and visit it, we may do it because we may send somebody out, or we may ourselves go out, take a look and see if it's vacant or occupied and get an idea of the condition. Those we would look at, but anything outside of that scope, we're generally not going to look at those. Those are the biggest terms to know and understand when you're looking at the online auctions, though.
Yeah, the only one I would add there that should mention everyone is reserves, right? Whether you're at the county courthouse or an online site, a lot of times they publish a reserve, and essentially if your bid is below that, the auction company or the bank who owns the property, whatever they may be, that doesn't have to accept your high bid. You might be able to negotiate something, or they'll just will ignore it and then put it back on another auction cycle.
It's a great point, because what they'll do, Mike, is on that reserve, let's say it's 200,000, that if you get to 90% of that reserve number, it'll trigger them to look at it. So a lot of times that'll happen.
Yeah. And then if you're buying at the courthouse steps for a sheriff's sale, it's going to have to be a cash kind of purchase or like a hard money lender. However, if you go to other types of online auctions, sometimes they allow financing too, whether it be a 203K loan or an asset-based lender. So that's something to look at in the fine print too. What type of sale is it? Cash only, or is there some kind of financing options? And then speaking of financing options, a good segue in our next topic, what are some different financing options for auction properties? And the first one is the easy one. These are, I would call hard money lenders. And these are companies that offer basically short-term or bridge loans, usually terms less than 12 months or up to 12 months, to basically finance, so to purchase, renovate, and then either refinance or you're reselling the property, essentially. Those will cost more. However, you have a seasoned person looking over your shoulders to see if this is a deal or not too, on top of your analysis. So it's an avenue we used in the past. Those loans will charge anywhere from like 1 to 3 points on average, and up to probably, depending on when, anywhere from 10 to 15% interest, depending on the credit worthiness and your track record as a borrower. Another group is private lenders. These are more individuals that, they have large savings. They don't want to earn 2% in their savings account. So they might essentially be the bank on your deal. Well, they'll partner with you and buy the house, and they'll charge an interest rate usually on this property. And when you sell it, you pay them back the principal and interest. So that's another example of private lenders. And then even this video is talking about you not using your own cash. I want to tap into two options that people might not always think about. With the huge rise in home prices the last 5 years, you might have a large amount of equity in your property if you own a property, and it'd be an opportunity to pull out a home equity line of credit. So if your property is worth $600K and you have a $300K loan on it, you have $300,000 in equity, and you could borrow against that equity, and with that HELOC to purchase these properties is essentially cash, and you will only be charged interest on it when you take the money out and use it. And then after you flip the property or refinance it and to keep it as a rental, you could then pay back that HELOC and the interest payment stop. So that's another example. And then another one is for certain properties you see out there on auction sites, it could be approved for a 203K FHA loan. There's a lot of paperwork around that one, and it's a longer close, but that's another avenue to utilize funds to purchase an auction property. And then the last one I'll close with is just joint venturing with an investor on the deal. Instead of just being a private lender, like a mortgage and note type of lender, this person will provide cash, and you will split the profits if you're flipping a property. If you make $50,000 profit on a flip, you would split it whatever ratios you set up. It could be 50-50, which is 25,000, 25,000 each in that example. So those are some financing options for auction properties. Paul, did I miss anything there?
No, you hit the nail on the head. And just give you a little background of how kind of I got started into it. Back in 2001, when I first started investing, I used my home equity line of credit. That's what I used to buy my properties and finance my properties. I looked at hard money lenders. They were too expensive. And back then, interest rates are around 4%. So it was really inexpensive to carry those costs for that period of time doing the rehab. So that's the greatest way to do it. As you build a history, then you have business tax returns. As soon as you can create an LLC or a corporation, then you have a history. Then you could borrow, get a business line of credit against your business once you show and you have a history of profits. And that gives you another resource. That's something I used in stage 2. And then when I started scaling and doing more, I'm like, we had to bring in private lenders, right? Private lenders were essential. And we fill in the gap with the private lenders with asset-based lenders. So basically what I'm saying is we use all of these things, credit cards as well, right? All that kind of stuff. Home Depot rewards cards, Lowe's rewards cards, regular old business credit cards that give you 2-3% money back on that. We utilize all these things. So don't think you just have to use one. You may need to start with one like I did, and you expand as you build out your business. But that is essentially for all of these, right?
Yeah. Now we talked about, finding money to buy these things. Let's just say you did your due diligence and you won a property at auction. There's 2 different ways. Usually money could be due. If you go to through a sheriff's sale at the courthouse, you're going to have to probably pay 5 to 10% of your purchase price that day, and then fund it the rest a few weeks later. Sometimes as far as in advance as 10 days later. Whereas an REO sale at an online auction, for example, you will probably have a lower deposit, earnest money deposit up front. Sometimes it's a few $1,000s. Sometimes it's 5% of purchase price. And then you'll usually have 30 days to close after that. So the timelines expand a little bit than a sheriff's sale auction. Anything to add there, Paul?
Yeah, then also the most important thing is you're going to get a title insurance policy on the bank-owned stuff where you're not going to get that same level of protection in a sheriff's sale, right? So which means you got to do a lot more due diligence on at courthouse steps when you're buying there. You got to know what liens are now. There water and sewer liens, are there contractor liens, is there an IRS lien, are there solar panel liens? These are all things we've talked about in past videos. Whereas the REO side, we make sure everything's wiped out. We've run into things where there still is a lease on the solar panels, and that was enough to make us walk away from deals, right? But at least going in, and you don't have to do that same level of due diligence.
Yeah. And then other things to consider now when preparing for auction day are, again, depending on what type of auction you're going to. If you're going to an in-person auction like a tax sale or a sheriff's sale, you might have to bring some ID information, a driver's license, and you go online, you might have to fill out like a buyer profile ahead of time, just general information about yourself, maybe even uploading a proof of funds letter, things like that. Anything to add there, Paul?
Yeah, the proof of funds letter is a really important one to have. Just shows that you do have the ability to close on a property, that you are approved through a lender or a private lender. So that's probably the most essential thing you're going to have there. Some of the sheriff sales, you either have to have a bank check, certified check, or a money order, at least a percentage of it, and then they'll let you write a check, regular check for the next percentage of it. But that varies by state and probably by county as well.
Yeah. And then the other thing to add on bidding day is to stick to your numbers, right? Going into the auction, you're going to know what your maximum offer is or maximum bid is. And don't get emotional. Bidding wars could happen. Just stick to your guns, stick to your numbers. You don't want to buy a property where you're going to end up losing on. So take emotion out of it and sticking to that max bid number, not kind of get caught on the roller coaster of emotion.
Don't fall in love with the property, fall in love with the deal. That's that's the advice we can give you.
Absolutely. Now, if we go to some post-auction steps, and really, once you won the bid, we talked about defining earnest money deposits. So you're going to have to, you're probably, again, depending on what type of auction you're going to go to, if you go to an online auction, you're going to get this all through via email. Usually there's a checkout form, and then you'll have to wire over some funds to what title company you want to use to run the title process, and then the bank will send you a contract to sign, etc. With the in-person auctions, again, it's going to vary by county and tax sale, with sheriff sale, etc. But it's kind of similar too. You kind of just have paperwork there, and the deposits usually do of around 10%. What's your experience been in some of those in-person auctions, Paul?
Yeah, they're a little bit more nerve-wracking because you do have to have so much more money up front and you have to close so much quicker. So when you and I looked at these, Mike, we've been there, we've been at the Bucks County auction house. We had to really do our due diligence before we went there to know what the situation was with the property, whether it's vacant, whether it's not, what kind of condition it's in, which means driving by it if you can. And that's something we did do, but it's essential because there's just a lot more risk with these properties. There's a lot more potential reward and upside though as well because of the risk.
Yeah. It's a good point that someone reminded me what you said is sometimes with these in-person auction too, like the sheriff sales or tax sales, you'll have a list, you kind of scratch out half the ones you don't want, the other ones you kind of put a number next to the one you want to bid on. And then when you get to the auction, they'll give you a revised sheet because a lot of these, someone might have paid the taxes, so they'll take it off the tax foreclosure sale. Or for whatever reason, they are able to catch up on the mortgage last minute, and that comes off the list. So be prepared to see, you might have had 10 properties you're going to bid on, and all of a sudden you might only have 6 to bid on because 4 of the ones kind of got paid in time, let's just say, before the auction happened. So that's something to consider mentally going into it as well.
Yeah, a lot of times, Mike, they'll get a stay just by filing for bankruptcy. That's probably the most common way for them to stop it. And just because you file for bankruptcy doesn't mean you're going to go through it. You just do the initial filing, and that's enough to stop the foreclosure process.
Yeah. So to wrap up, buying a house at auction without cash is possible. And with the right preparation and strategy, you're going to know on what to bid on and not get emotional about it. And if you got a lot of value out of this video, we actually created a gift to share with you guys, a free gift. And we call it the auction blueprint. And I'm going to put the link in the description below the video. But in this auction blueprint, you're going to discover these 7 simple auction steps that we kind of highlighted in more detail on this video. And it's kind of like our free gift to you for watching this.